Downside protection. Investing in the stock market can lead to huge losses. A brief walk through history can help us understand the magnitude of extreme events. The Great Depression crash of 1929. The worst stock market crash in history started in 1929 and was one of the catalysts of the Great Depression. By mid-November 1929, the Dow had lost about half its value. The Dow continued to lose value until the summer of 1932, when it bottomed out, a stomach churning 89% below its peak. The Dow didn't regain its pre-crash value until 1954. After that, we have the Black Monday crash of 1987. On Monday, October 19, 1987, the Dow Jones Industrial Average plunged by nearly 22%. Black Monday, as the day is now known, marks the biggest single-day decline in stock market history. By November 1987, major US and global stock market indexes had lost more than 20% of their value. The remainder of the month wasn't much better. After that, we have the dot-com bubble crash of 2000. During the late 1990s, the values of internet-based stocks rose sharply. As a result, the technology-dominated Nasdaq Composite Index surged from 1,000 points in 1995 to more than 5,000 in 2000. But in early 2001, the dot-com stock bubble started to burst. The Nasdaq peaked at 5,048 points on March 10. The index would go on to plummet by 76.81% until it reached a low of 1,100 points on Oct 2002. After that, we have the financial crisis crash of 2008. This debt-fueled stock market started to show signs of impending collapse in March 2007, when banks could not cover their losses linked to subprime mortgages. By September of 2008, the major stock indexes had lost nearly 20% of their value. The Dow didn't reach its lowest point, which was 54% below its peak, until March 6, 2009. It then took 4 years for the Dow to fully recover from the crash. After that, we have the coronavirus crash of 2020. The most recent stock market crash occurred in 2020 as COVID-19 spread worldwide. During the fourth month of 2020, the Dow Jones tumbled 11%, marking the biggest weekly declines to occur since the financial crisis of 2008. The Dow reached its lowest point at 38% below its peak on March 2020. All these cases are black swan events, unpredictable events that are beyond what is normally expected of a situation and have potentially severe consequences. The fact is these events exist, they repeat and in different forms, adding dramatic risk to our investment portfolio. Therefore, we need a robust downside protection system to reduce their catastrophic effect on our portfolio. We need a system that controls the maximum amount we are willing to risk. In the next section, we will show 2 systems that were built for this.